General Manager of the Bank for International Settlements, Mr. Augustine Carstens, Managing Director of the Monetary Authority of Singapore, Mr. Ravi Menon, distinguished guests, ladies and gentlemen, a very warm welcome to today's event, a special keynote address by Mr. Carstens entitled Innovation and the Future of the Monetary System. As a brief introduction, Mr. Carstens was appointed General Manager of the BIS in 2017. Prior to this, Mr. Carstens served as Governor of the Bank of Mexico from 2010 to 2017 and was a member of the BIS board. His illustrious career included chairing the IMF's International Monetary and Financial Committee from 2015 to 2017 and serving as Mexico's finance minister from 2006 to 2009. The BIS's mission is to support central banks' pursuit of monetary and financial stability through international cooperation and to act as a bank for central banks. Under Mr. Carstens' leadership, the BIS launched the BIS Innovation Hub initiative. The hub provides a platform for central banks to jointly explore the benefits of new technologies and develop problem-solving products as central bank public goods to enhance the functioning of the global financial system. MES regards the BIS as a key partner in innovation, and since 2019, we have been a proud host to the BIS Innovation Hub Singapore Centre. MES is proud to partner the BIS for today's event. We will begin with a keynote speech by Mr. Carstens on the impact of fintech innovations in shaping the future monetary system and the role which central banks can play to bring about that future. This will be followed by a Q&A session moderated by MES's Chief Fintech Officer, Mr. Supnendu Mohanty. Without further ado, I would like to hand over to Mr. Mohanty.
Oh, no, you can get to give your speech. And while we wait for you to give a speech, I'll prepare some good questions for you, Augustine. Okay?
Well, good afternoon. It's for me a real pleasure to be here again at the MAS. I'm very grateful to Ravi Menon for hosting us here and for his tremendous support he has given us through all this time, in particular hosting our Innovation Center here, being a partner with us in that respect. And I would say more than that, by constantly inspiring us about technology. Ravi is a real leader in this field, and I have to say that it has been extremely productive, our interaction. So let me say that it's also great to give this speech here in Singapore, because also Singapore is now very well known as being a true hotbed of financial technology and innovation in Asia. So as the Singapore FinTech Festival demonstrates year after year, innovation in money and payments is moving at a very rapid pace, and often with the goal to rethink how do we use money. Certainly, the MAS has made a substantial contribution in this respect. More generally, central banks have a duty to keep up with technological change and changes in users' demands, to ensure that central bank money is made available in a way that is relevant for the digital economy. This is part of central bank's mandate to serve the public. Today, I would like to make the point that to reap the greatest benefits of innovation in money and payments, we must think big. We need to have a vision for the future monetary system and for the role of central banks in driving innovation that meets evolving needs. This is not an easy feat, thanks to the nature of innovation itself, which is rarely linear and often unpredictable. A great example of that is the evolution of smartphones. When Steve Jobs strode on the stage to unveil the first iPhone in 2007, it was described as a laptop in the form of a phone. Its connection to the internet did not receive much attention. And by many accounts, Apple's leaders were reluctant to let outsiders to develop applications to use on it. It's hard to believe that this was only 16 years ago. nobody could have predicted how fundamentally the smartphone has changed the way we work, communicate, and interact. All these changes happened not because smartphones imitated computers, but because they let others use their creativity to develop new products and services through apps. The smartphone offers a couple of lessons about innovation. First, for innovation to flourish, it requires a stable and safe infrastructure that unleashes the private sector's creativity and ingenuity. And second, the various components on a platform must be able to work together seamlessly, just like when I use my phone to take a picture and share it on social media. This is closely related to the notion of composability, which I will develop further. But in looking at these examples, we must also be aware of what not to do. Dominant technological platforms can often exploit networks effects to stifle competition and lock customers inside walled gardens. This is one aspect in which the role of central banks in innovation diverges from the private sector. As accountable public institutions, central banks strive to serve the public interest rather than private profits. With these points in mind, let me elaborate on how we can translate these lessons into the world of financial innovation, especially from a central bank perspective. Even though it is inherently difficult to predict what form of innovation will take, we must make sure that we have the right infrastructure in place to promote it in a sound and open way. I put forward the case of that central banks, as the guardians of trust in money, are uniquely positioned to lay the foundations for such next generation infrastructure. Around the world, central banks are exploring how to give money new capabilities. The BIS is supporting much of this work as it incubates projects and catalyzes new ideas in the world of central banking. This includes work on central bank digital currencies at both wholesale and retail levels, as well as fast payment systems and their interlinkages across borders. We're also experimenting with the tokenization of different assets, including tokenized deposits. But to fully realize the transformative potential of these new financial technologies, we need some way to bring them all together. In this regard, there is a great promise in developing the idea of a unified ledger with a common programming environment. A unified ledger is a digital infrastructure with the potential to combine the monetary system with other registries of real and financial claims. It would need to be a public-private partnership with clear division of roles and where the central bank tasked with underpinning the trust in money. Like smartphone platforms, a unified ledger allows various components to work seamlessly together. But unlike them, it is enabled by open architecture that promotes financial inclusion and greater competition. Such a ledger allows for the use of smart contracts and composability. A smart contract is a computer program that executes conditional if-then and while commands. Composability means that many smart contracts covering multiple transactions and situations can be bundled together like a money Lego. With these new functionalities, any sequence of transactions in programmable money can be automated and seamlessly integrated. This reduces the need for manual interventions that delay transactions and reduces dependency on intermediaries, and also allows for simultaneous and near-instant payments and settlement. Greater interoperability and automated transfers could ultimately benefit consumers through more convenient and cheaper products that are better tailored to their needs, thereby enhancing financial inclusion. These foreseeable gains may just be the tip of the iceberg of additional transformations. Think about how the smartphone displays digital cameras. it was not because it takes better pictures, but because it's easier to share these pictures with friends through the same device. Importantly, programmability and composability do not require decentralized or permissionless platforms. All the potential benefits I just outlined can be achieved in permissioned platforms with various degrees of centralization. What really brings the benefits of these projects together is the use of money as a means of payments and settlement. As a provider of the ultimate settlement asset in the economy, the central bank therefore has an important role to play in the governance of a unified ledger. But it would do so in partnership with other public agencies as well as with private sector participants. In designing these new infrastructures, there has to be clear thinking on the respective roles of the central bank and the private sector. The central bank stands at the core of the monetary system. It continues to issue central bank money as the economy unit of account and ensures the ultimate finality of payments through settlement on its balance sheet. However, the consumer-facing activities are based taken on by the private sector. So a guiding principle for the unified ledger is to preserve this partnership between the central bank and the private sector. The aim is to tap into private sector creativity and ingenuity to develop new products and services, rather as the smartphone makers decided to open their platforms to outside developers. Without the almost 2 million apps that exist today, the smartphone ecosystem would be that much poorer. Trust in the central bank and the regulatory and supervisory infrastructure preserves an essential feature on the monetary system, the singleness of money. Singleness refers to the fact that private money is issued by different banks and central bank's money all trade at par. 1 Singaporean dollar deposited in my bank is worth 1 Singaporean dollar in another bank, and I can convert my deposits into the same amount of cash at an ATM. Viewed through this lens, it is clear that CBDCs and tokenized deposits do not represent new types of money. Instead, they replicate existing forms of money in a technologically superior way. CBDCs, for example, would play the role that central bank money plays in today's system. Tokenized deposits will play the role of commercial bank money. What makes central bank money and commercial bank money indistinguishable today is a complex and well-developed network of institutional arrangements, including regulation, supervision, deposit insurance, and settlement on the central bank's books. The same should be true of CBDC and tokenized deposits. But how are we to take full advantage of these technologically superior forms of money? This is where the unified ledger comes in. CBDCs and tokenized deposits would appear in separate partitions of the unified ledger. Because they share a common ledger, they can be brought together and used in an efficient way through smart contracts. This would facilitate inclusion and lower transaction costs. Other partitions of the ledger could be used for other assets. The novel functionalities arising from this design can enable money to work more efficiently. It takes me to my next point. When combined with programmability and composability, the additional functionality could open a whole new range of services that impact our daily lives. One example is by enabling micropayments that are currently not economical, such as tips to the providers of social media content or direct payments between Internet of Things devices. Tokenized deposits and CBDCs could also open the door for more efficient payment arrangements in business settings or for larger purchases. For example, the BIS Innovation Hub Singapore Center plans to experiment with embedding policy and regulatory measures in smart contracts with the view of automating compliance and increasing transparency. Compliance costs are large, but by using tokenized deposits and smart contracts, costs would fall, making payments more efficient. This would facilitate inclusion. Another example would be the process of escrow for buying a house. Escrow accounts secure the funds provided by the buyer until the conditions of a real estate contract are fulfilled. As escrow accounts are usually handled by a third party, the escrow process involves the transfer of funds across different accounts, often at different banks. Using a smart contract, the escrow process could be automated by locking the respective funds in the buyer's account. Once the escrow process is concluded, the smart contract transfers the money to the seller automatically, and instant settlement is achieved via digital central bank money. By relying on the same institutional structure and using the same trusted settlement asset as in today's system, the singleness of money is preserved. The full benefits of this revamped escrow process arise from having commercial bank deposits and central bank money in the same programmable form on an integrated platform, a unified ledger. Thinking even further ahead, we could envisage both assets and multiple regulated entities, commercial banks, payment services providers, assets registries, etc., in coordination with the central bank on the unified ledger. The idea is to put complementary things, central bank money, commercial bank money, digital assets, in the same place so that they can interact in efficient ways, like apps on a smartphone. This tokenization could make buying, selling, and transferring assets faster, cheaper, and more transparent. Indeed, it could even make delayed settlements of different assets like bonds, stocks, and foreign exchange a thing of the past. The level of certainty in financial markets would, needless to say, increase markedly. There may be broader economic advantages. As data are recorded on the unified ledger, we can create common and trusted knowledge in a secure and privacy-protecting way. This can open the door for contracts that are not feasible today and which can help individuals and firms to better manage risks. Of course, there are alternative visions of what the future monetary system and digital money could look like. For example, many crypto proponents argue that stablecoins should be in the future of money. But what this view forgets is that what sustains fiat money is not the application of novel technologies, but all the institutional arrangements and social conventions behind it. And it is precisely these arrangements and conventions that make money reliable for the public. Indeed, the past year's events have cast serious doubts on the ability of stablecoins to function as money. Stablecoins must import their credibility from sovereign fiat currencies. They do not benefit from the regulatory requirements and protections applying to bank deposits. They do not settle in central bank money or enjoy lender of last resort support. Accordingly, they cannot guarantee the singleness of money. Admittedly, most stablecoins trade closer to par when all is well, but things are not always well, and when that happens, exchange rates across payment instruments creep in and the singleness of money is broken. By departing from this core principle, we lose an important part of the soul of money. Tokenized deposit, in contrast, embody the key aspects of our current system, whereby central bank money and commercial bank money are indistinguishable and come with certain assurances. However, there is an important lesson to be taken from stablecoins from a public perspective. Stablecoins arose in part because some of the technical capabilities they provide cannot currently be met by existing form of money. It is incumbent upon central banks to make sure they contribute to developing an infrastructure that meets these demands. If central banks do not innovate, others will step in. In the meantime, we must ensure that stablecoins do not harm investors and consumers or contribute to a fragmentation of the monetary system that undermines the singleness of money. So stablecoins could, in principle, or should in principle, exists, but on a very tight regulatory framework while we develop the other options. Let me conclude. Central banks must embrace innovation. They have a powerful and important mandate to provide safe and stable money and in the most efficient and useful way for society. To embrace its evolution and potential, they should build on the strong foundations that exist, but not to be limited by them. Facilitating the existence of CBDC and tokenized deposits would provide the technological representation of money that further innovation needs. Bringing them into a unified ledger would have a catalytic effect on further innovation conducted by the private sector. The good news is that central banks around the world are actively working towards a monetary system that embeds the best of new technology in the solid foundations of the current two-tier structure. The goal is to build a future monetary system that is adaptable and enables innovation by the private sector in a safe and sound way, in whichever form it may come. Thank you very much.
Thank you for the insightful speech, Mr. Carstens. We now move on to the Q&A segment of today's event, which will be moderated by MAS's Chief FinTech Officer, Mr. Supnendu Mohanty.
Augustine, you just gave a huge Twitter headline. Do you realize now? I'm sure if the Twitter headline says Augustine Carstens pushes for unified programming ledger, I'm sure there'll be a Twitter storm today. I hope anybody out here going to rest to put the Twitter out there. But this is quite a bold statement, Augustine, to argue for a. Sorry, you can. Why don't you take water?
Yeah, it's very complicated.
Yeah.
Okay.
Yeah, I think you have to drink a couple of more. Given you have made this huge announcement in your yeah, you need it. I'm sure a lot of people need to drink tequila after you announce this, not you. You have made a huge argument for completely different kind of ledger. This is huge. I don't know how people are processing this. I think asking industry to look at a unified programmable ledger against a decentralized ledger and allowing central bank, if I go through your speech, I'll still have time I need some time to digest that whole thing. You are actually suggesting a competing ledger in the market where the underlying currency is central bank currency or tokenized deposit, and people can write the same smart contracts and go and tokenize those assets. You have just killed multiple billion-dollar future market. So what made you think that this is something you would consider as part of your future of finance, future of money?
Well, first of all, thank you very much, Subnando, for this question. And yes, it's as I said, sometimes we need to be bold, and sometimes we need to think big. We are in the planning process. I mean, this has to be put in context of the moment that we are living. We are in a unique situation in finance and in central banking where we have at our hand a technology that didn't exist before. And I think it is incumbent on us to think what is the best way we can use that technology. And I think that there are many problems in the way the financial system works that we have been trying to deal with. But our thinking is that sometimes the inertia of legacy is very strong. And therefore, we make marginal improvements here and there. Now, to have a completely different rethink, it's, I think, refreshing from the point of view that it allows you to think on alternatives and to think on ways where many of these frictional elements can be eliminated. I mean, this is a bold idea thrown to the public, and I'm sure that many will embrace it. Many will say, "Oh my God, people in Basel now are getting crazy," But I think it's important to start the dialogue. It's very important to start the dialogue. I mean, to give shape to this is not easy.
Absolutely.
We have to work a lot on the details, and as we say, innovation is unpredictable, so we really do not know exactly where we will end up with. But what we really want to do is to see if we can generate a sea change. And the fact that we were inspired by the smartphone is because we see a very clear example of how transformative a big thought can be. So that is a little bit the motivation of this.
And when you say smartphone, I presume that you're going to be in charge of manufacturing the hardware, and you'll be in charge of manufacturing the chip, and then you'll open up the APIs for people to program. Is that what you meant? You mean central bankers and...
Yeah, I mean, I think we need to provide the heart of the system. And the heart of the system, I mean, we can think of as a physical heart that pumps, the blood to the system, the blood being the money. So we are not going to build everything, but the core issue, which is money, and how money can be combined with other programmable contracts and other programmable options to complete financial markets in a more efficient way.
Well, we're going to pass around the mic to anybody who's going to answer a question to Augustine here, because this is an open Q&A. All of you are expected to ask question. I'm just filling your space in case you are still thinking about the right question for Augustine. But if you have a burning question on the unified programmable money, please raise your hand now, because you may lose that opportunity before I move to the next question. Anybody out there on asking Augustine on this programmable money? Or so unified programmable ledger? Anyone? Anyone from the private sector? Yeah. We have Ivan from IFC.
Thank you. Yeah, I'm just curious, if we think about then the transition to this, will this make it easier or more difficult for smaller markets with less capacity to participate and make that transition to this new technology, you think? Other central banks, not in Singapore, but in some of the neighboring markets?
Well, as we have seen developments in the financial markets, we have to start with simple issues and core issues, and so as we see how technology and innovation has been progressing, we have started with the most elementary thing, which is money, and is a representation of money, and I think there we still have to make a lot of progress. So we need to continue to do that, but then we should start thinking of applying this idea of programmable contracts and to use smart contracts in the most, I would say, primitive expressions of financial services, and then slowly be growing, making progress on more complicated issues. What I think is key here is that we need to have a vision of where we want to go. And I think a little bit, now that we are in the BIS, have been involved in innovation and technology for many, many years, sometimes I feel that we are touching here and touching there, and thinking on the marginal thing that can be done better technologically speaking. But at the end of the day, if you want to add everything up, there is not much we can say. I mean, we have marginal improvements here and there, but fundamentally we haven't changed that much. Now, if we really want to make the next steps, we need therefore to think probably bigger. Now, the private sector does that all the time. I mean, we have today the example of DeFi. Now, DeFi, we have seen many accidents, and of course there are many lessons for us to be learned. But what is interesting is that they are daring to change things. And in a more controllable, more thoughtful way, I think that we need to dare to explore, to push our frontier slowly and gradually. This shouldn't be rushed. This shouldn't be capricious. It should be a thought process. But I think that the situation we face today lends itself to thinking of this type of architecture.
I guess, sorry, yeah, there's a question. You can introduce yourself.
I'm Sumit Agarwal from NUS. So you talked about financial inclusion. I worry, will this exclude the elderly or the young or poor because of lack of financial literacy?
Yeah, I mean, obviously this cannot solve every single problem, no? But if you are able to program things and you can, for example, write an app for all people and sort of convert a financial transaction to a simpler way to assimilate the transaction, it is doable, no? I mean, we have seen in many countries that people that barely read and that actually not very numerically advanced, they can use an ATM machine. So why cannot we think of apps for people in that field? Now, what is needed is to have the programmable money and the digital money that would make it feasible to operate an app of that sort.
I think taking both the question, Augustine, I mean, if you look at today's architecture, today's technology platform, which is decentralized platform, today we know how to program money. Mm-hmm. We know how to write smart contracts. We have many examples of tokenizing assets, may not have scaled at a very subscale level. What you are really putting an argument here now, which will be a huge undertaking, and I'm sure there's a role for private sector to play here. Somebody has to build this open, I presume, open source operating system. A lot of fundamental, foundational coding has to be done to build this platform. What role you think private sector will play? Because to both Ivan's question and Sumit's question, I think ultimately the burden of building this open architecture programmable ledger will be given to the private sector to build. I can't imagine how a public sector will build this kind of. There's no example today globally where a public sector has built an operating system on which apps can be developed.
Yeah, I mean, what at least what we aspire to, is again, as I say, is to build the heart on which different parts could be integrated.
Yes.
And from our point of view, from the point of view of financial authority, what is of the essence, I mean, the real essence of the financial system is money. And I think that's what we need to do to make it technologically malleable enough so that it can be have broader applications. I mean, and it wouldn't necessarily be that different from what we have today.
Okay.
You know, I mean, today commercial banks have already, based on the foundations we have today, the two-tier system that has been there for quite some time, they have developed a lot of code. They have developed a lot of program. They have developed very complex back offices that sometimes you ask yourself, how efficient are they? And it has flourished by itself. But you need to give the key elements on which they can build on. And a lot of the elements to build on also has to do with other activities, like is legal framework, rules, regulation, and so on. So yes, this is a huge undertaking.
And I hope there'll be a lot of private sector who will raise their hand to support you.
I hope so.
And definitely Singapore ecosystem will be excited given you have announced here. I'm hoping a lot of our private sector will reach out to BIS hubs around the world. Well, I think if there's no question still, I will proceed to my next. Oh, there's one question there.
Hi, Atul from Patio. Quite keen to understand your thoughts around the synergies or potential synergies in payments vis-a-vis the other components of the financial system. You've got the securities markets, the foreign exchange markets, the bond markets, and there is a lot of potential in terms of being able to solve problem for these different parts of the financial ecosystem. Quite keen to hear your thoughts around how the unified programmable ledger can solve some of those use cases.
Well, I mean, at the end of the day, there is a lot of interaction among the different markets, no? I mean, for example, foreign exchanges is the exchange of two units of account, of two monies. Therefore, if you have, if those monies flow on rails that can coordinate themselves, this can be done in a very seamless way. As it is today, I mean, I think there we have made a lot of progress, and we're making use of innovation there already. An area where we haven't made much progress, and that's something that we were talking today here in the MAS, we haven't made much progress in tokenizing other assets. So if we make, why hasn't other assets not been enough tokenized? Is a problem of chicken and egg, you know. We don't have tokenized assets because we don't have tokenized money, or we don't have the adequate legal framework. So the idea is here, how can we think of an architecture that could allow those things to happen? Because I'm of the belief that having more digital assets and work on a more seamless way, it would bring a more efficient system and reduce a lot of the frictions that are present today.
Augustine, I think by pitching for this unified programmable ledger, you actually made the argument for CBDCs more stronger now. When I go through your speech, you have extended that to also tokenized deposit, which I presume commercial bank will participate in issuing a digital version of the currency. Now, is this push coming from because you felt there is a gap today which the cryptocurrencies were trying to fill in, and which the traditional money in the previous form was not able to satisfy? Is that's the motivation which drove this need to strengthen the argument for a CBDC on a tokenized deposit?
Well, I think at the center of my speech is this argument that we've worked so much for so many years to make central bank money or primary money indistinguishable from commercial bank money, that why don't we just build on that, you know? And this is also tied to what you have asked, you are mentioning, that we want to bring on board private sector and commercial banks. Now, commercial banks will not necessarily put a lot of interest in something that is run only with CBDC, but they definitely should be interested in developing something that is based on tokenized deposits.
Sure.
Now, tokenized deposits and central bank money interact in a seamless way today. They coexist. So why can't we build on that? No? As a matter of fact, one of the reasons why deposit in one bank to deposit in another, as I made the example, is because you can move to cash if you want. So even if you don't move to cash, but the fact that you have that possibility is key to the whole system. So, I mean, I think that we have been discussing things a little bit on silos. We think only of CBDC, and what would happen if CBDC would be the dominant player? And then we worry about crowding out, and we worried about all these things. But why can't we think on a way where the two could coexist? And I mean, that's what we have today. So why don't we leverage on that?
And the tokenized deposit, I meant, which you prefer to call commercial bank money, will trigger the outcome which we are looking for, the tokenized assets, which will
Yeah.
be super efficient in terms of exchange between two parties, because now we have money in a programmable form, which can drive that outcome. So that's where you are. I mean, when you spoke
Yes,
about
yes.
ultimate outcome is
Yes.
get to that efficiency
Absolutely.
using commercial bank money more in that direction. But whether if commercial bank tokenized deposit do succeed in delivering that outcome, do you think there'll be still a existence of a CBDC,
Yeah.
and for
Yeah.
what for?
Well, I mean, there are many arguments. One is at the end of the day, I mean, the only discussion that we're having is it will have a retail representation or not, because at the end of the day, I think wholesale CBDC should be taken for granted.
It is always there in different form.
Yeah, yeah. Now, the retail is because I think there is political arguments, and the political arguments is that we need to give to people the option to have a liability of the central bank. And it works in tandem with commercial bank money. You know, I think it's essential that you can go from one through the other. Now, some people might say there is a risk of run, but that risk of run, we have it today. I mean, that will not disappear.
Yes.
You know, so I think there are complementaries that are very, very strong, and that, as a matter of fact, has allowed the system that we have today to exist.
And by the way, I showed Augustine yesterday the India retail CBDC, and he asked me, "Can you add a smell to that?" and I think if you add a smell to that retail CBDC in that note bill in form of a bill, it does supplements the role cash pay today, because in India also 50% of the transaction is cash. Singapore, despite our advancement in this space, we still have 22% cash-based transaction merchants. So there is an argument where retail CBDC will exist as a payment instrument, super efficient payment instrument for the lower tier segment. Is that what? And people will hold it as a safety net rather than a primary form of
Absolutely.
Form of a payment instrument.
Absolutely.
So you think that all central bank governors should be looking forward to issue a retail CBDC? I'm not saying that from MAS perspective, but just I'm not representing MAS here, as I'm a simple moderator here today. But I think there seems to be a signal from your side that there will be a play of a retail CBDC, irrespective of the market demand, just to be out there as an alternate form of cash, or form factor for cash.
Yeah, I mean, at the end of the day, central banks will have to take their own decisions. They have to evaluate the circumstance. There are still a lot of challenges ahead. This system cannot fail. It needs to be appealing to people.
Yes.
But I think it at least in my concept of a future monetary system, it definitely is a key element.
Sure. Any question? Because we have another 15 minutes to go. Anybody? They're very shy. Anyway, I think I have a lot of questions. Almost as a passing remark, you have given a last straw of hope for stablecoin. You seems to say that stablecoin will not stand up to the tokenized deposit, which means, are you saying something here? Anything you want to clarify that?
No, I mean, I think stable coins have been has been a solution.
Looking for a problem.
No. It's a solution to a problem we face today, but there should be better solutions to the problem.
Okay.
And I think the better solutions to the problem would be central bank money or commercial bank money. And I mean, I think with stable coins, to start the name of stable coins is a little bit concerning. I mean, the fact that you need to put the qualification it's stable. Why is stable? Because it might not be stable, you know. So why it might not be stable? Well, because it's not issued by the central bank, and therefore we need to import its credibility and its value through attaching other assets to that expression of money.
Sure.
So that's not a good construction, you know. Now, if the issue we need to go there, because today there is no CBDC, or today there is not private bank money, well, I think that's fine. But let's try to get rid of that as soon as possible.
Okay.
You know, so that's a little bit my very simplistic view.
I see. On the same CBDC line, the one issue keep on coming if it is issued by the state or a regulated entity is the question of privacy. And how do you think privacy in this context of, again, back to unified programmable ledger, CBDC, tokenized deposits, retail CBDC, do you think privacy will become a negative factor there?
Well, you know, we know very well that we can construct a CBDC system that that basically does what is essential in all this discussion, which is the mapping of an individual to an account. And it's a fact of identification. I mean, that's essential. We cannot exist without that. Now, who has access to that information? We know that we can keep it to a minimum. And it's more a political decision on who has access to that information. I think per se central banks do not have any particular need to abuse of that information. But also I think in this debate we need to put things in perspective. I mean, how anonymous are your transactions today?
Yeah, people.
You know, you start by discussing AML CFT,
Yeah.
you know, that's a key element. Then also if I go to the branch, a commercial bank branch in a corner and I ask for 100,000 Singapore dollars in cash, I will not be anonymous, you know. I mean, all the alarms will be. So is cash anonymous or not?
I see. You
I
think
mean-
privacy is a moot point.
Yeah, I mean, I think that we can, I think that we can go around that issue in a way that is socially acceptable.
Okay, still no questions. You know, I went to ChatGPT yesterday and I put a question that, give me a difficult question for me to ask to Augustine Carstens. And the ChatGPT gave an interesting response that they cannot determine what is a complex question for you. and it kept on giving me questions which is, I think, easy for you. So I think when ChatGPT is worried about putting a big disclaimer of what question I can ask you. But as I was trying different combination on getting ChatGPT to give me a real good question, a question I got was not on the CBDC, was on the payment infrastructure. So if I can ask that question to you, because audience are not asking question. The question was that with all the geopolitical impact on international systems, infrastructure, advancement to payment systems, will it take a change? Because will you see a fragmentation of payment system as geopolitics becomes complex, SWIFT network and those interconnected payment system? Is there a risk of divergence in the international payment systems due to the complex geopolitics situation we are evolving to?
Well, I mean, you know that there are definitely there are some conflicts around the world, and obviously there is some mapping on that on some financial transactions. But by and large, I see the payment systems very strong. I mean, in the international scene, at the end of the day, I haven't seen much change of the dominance of the dollar. And I think that will continue. No, so I mean, at least in the face of major conflicts, yes, there has been some isolated manifestations of problems that are sort of obvious given the nature of the conflict. But by and large, the system has been tremendously solid. and I think it will continue to be very resilient.
I see. And given yesterday, Augustine, we went Singapore and India connected their domestic payment systems, and we are in fact yesterday in the media briefing, I was asked a question, how about multi-country integration? And nowadays, if you get question like that, we just says it'll get Nexus. So we just use Nexus as an excuse to answer all this complex question on payment system. So it is a verb for us now, because we just have to say that. We don't have to answer the question. Now, your view on Nexus, given it is a BIS project to solve that need for a much more multilateral integrated payment infrastructure.
No, I think Nexus is a great idea. I mean, obviously we have developed it together. I think in many of these problems and solutions that we have created, what is important is to have real-life examples, and I'm extremely happy to see that here in Southeastern Asia, with the leadership of Singapore, we are going to see this. I mean, I see that the solution we're providing has huge potential in the region where I come from, in Latin America and in the Americas. I'm going to actively promote it, because I think it definitely has a lot of potential of application there.
And I agree with you. In fact, one of the big motivation of driving that kind of payment infrastructure is to bring down the cost of transfers, make it easier for people to send money in a timely way. So when can we expect Nexus to take shape? You think that there's an appetite for countries, central banks around the world to adopt a Nexus kind of architecture in the next 5 to 10 years?
Well, I think real life examples are important.
So we should get one example.
And
deliver.
once it's running, I think more people will be definitely interested.
Sure, and I'm sure we'll look for. We hope Asia becomes the global template for such program, and I'm absolutely sure the ASEAN 5 countries who are part of Nexus will get there. Now, when I met few people today in the audience, there is a question there. Yes.
Hi, thanks. This is Jason from the blockchain industry. I got a question on what's your view on public ledger markets or the public blockchains in terms of them building their own decentralized finance ecosystems in relation to your unified programmable ledger, because they continue to flourish now. How do you see that working in parallel? Can it, or if so, how can it coexist with your vision for the future?
Augustine, you realize 2 questions are telling you this is becoming a so be careful of this.
No, I mean, I didn't understand very well the question, but if the question has to do with what is out there with DeFi today, no, and how would that relate to our vision? I mean, I think that a lot of DeFi activity that is out there needs to be regulated, you know. I mean, I think that the recent events have been very unfortunate, and I think has given us a lot to think. And obviously, I think in the sector there is a lot of reflection on the issues. It seems that some of these assets can play a role in terms of investment alternatives. So if they are conceptualized in a more solid way and there is adequate regulation, I don't see why they could not be part of this unified ledger. I mean, if there is where to interconnect them, why not? No, but there are some safeguards that need to be there.
And also his question was that the public ledger out there is decentralized. This will be unified. And the second part of the question was that is powered by a incentive crypto coins, which is the underlying financial token. In this case, you are making argument it is centralized. It is backed by the money is the central bank money. The difference is you are now providing an open APIs or some kind of services on which you can tokenize assets and build those smart contracts. That's what I understood from your speech.
Yeah.
That's the argument you're making.
Yeah, yeah.
Sorry, any more? Yeah, one more.
In your ledger, let me ask you a different question. Do you envision or think about runs or deposit insurance or role of deposit insurance in this setting?
Well, in principle, if we want to institutions we have today, we would need to make it transferable to the new ledger, yes. Absolutely.
Okay, now, okay, one more. Yeah, I think questions are coming late and quite late in the process. Okay.
Hi,
right.
this is Kunal from Partior. In your ledger, I guess. And I know Swapnendu mentioned that you probably see the private sector kind of potentially building it. But do you see this more of as a consortia approach, or just one or two parties within the private sector doing it? And have you had any thought about maybe the governance of it as well?
We are open to suggestions, you know. I mean, I think that we have been very successful to build large financial systems and convoluted financial systems. Now, here the principle is how can we organize it? You know, I mean, obviously there will be a lot of inertia of what we have. But, you know, I mean, the idea is thrown out there, so help me also think on how to make my ledger better. You know, I mean, this is...
I can tell Augustine, if you make an open source architecture, I'm sure private sector will come and contribute. I guess you don't intend to run a ledger. You intend to put an architecture, an open source design with some governance control.
That's the idea.
Yeah, and so that people can develop that open protocol with your and central bank's blessings, and that becomes the main infrastructure of the future.
And to provide guidelines to see what are the rules
Yes,
of the game.
yes, and that can be in some way a regulatory decision people can make. While I think that's at least, Augustine, you should give credit to the crypto industry to make you think differently.
Yes, absolutely. No,
So
definitely is of the essence.
Yeah, I think while we may not like them anymore, at least we should thank them that this is forcing us to have this discussion on a very new technology stacks and programmability and all this thing. While we are almost there, I would like to close by asking you to come to a Singapore FinTech Festival this year and explain more about this unified programmable ledger. And hopefully by the time we will have enough of argument of how to build tokenized assets, which ultimately is what industry wants to build more and more. Yes. And with the runway from today to Singapore FinTech Festival, 2nd week of November, we're hoping to see you again in Singapore. And hopefully you publicly accept my invitation.
Okay.
Thank you. Thank you, Augustine. Thanks for being a good host.
Much. Thank you.
Thank you, Mr. Carstens and Mr. Mohanty. Ladies and gentlemen, we have now come to the end of today's event. Let me, on behalf of the BIS and MES, thank our guests for being here with us today. Thank you and have a wonderful day ahead.